Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings to uncover the real stories behind the numbers. Today, we're looking at Range Impact Incorporated's latest report, and let me tell you, it is a bit like a treasure hunt with some unexpected twists and turns. Stay tuned, because this filing might just reveal a whole lot about the company's strategic U-turns and new directions. Before we start, if you appreciate getting straight insights from corporate documents without the fluff, make sure you are subscribed. And hey, we've got a fantastic Discord community linked in the description below where we break down these filings and share more insights. You won't want to miss it. Alright, let's get into what Range Impact Inc. has been up to. This is a current report, meaning it covers some pretty significant events that happened recently, specifically around the 31st of December 2025. Essentially, the company is reporting on some major deals it made to either sell off parts of its business or acquire new assets. So, the first big piece of news is that a subsidiary of Range Impact called Range Reclaim LLC sold off all the shares of another subsidiary, Collins Building and Contracting Inc. This sale happened on the 31st of December 2025. The buyer was an unrelated company called Collins Reclamation LLC. What is interesting here is that Range Impact had only bought this Collins Building business back in August 2023. At the time, they thought it was a good way to expand their services in abandoned mineland and bond forfeiture projects, especially in West Virginia. But it seems like they've had a change of heart. They decided it was better to exit this specific business, the abandoned mineland business, to really focus their resources on reclaiming and repurposing mine sites that they already own. This sale of Collins Building is actually the final step in them getting out of that part of the business. So, a quick buy and then a quick sell. It makes you wonder what the strategy was in the first place, but clearly, they believe their future lies elsewhere. Now, on to another significant transaction that happened on the same day, the 31st of December 2025. This time, it involves a newly formed subsidiary called Range Bluegrass Land LLC, or Range Bluegrass for short. They entered into a purchase and sale agreement called the Bluegrass PSA to buy some real and personal property in eastern Kentucky. This property is associated with old mining operations, specifically Premier Elkhorn and Cambrian coal. What is really striking about this deal is that Range Bluegrass didn't have to pay any actual cash for this property. The entire deal was based on Range Bluegrass agreeing to take over responsibility for managing and releasing 43 mining permits. These permits are owned by another company called Reckoning Reclamation LLC, and they are all tied to this Premier Cambrian property. So, Range Bluegrass is essentially taking on the costs and obligations associated with these permits. And speaking of obligations to handle these reclamation costs, Range Bluegrass also entered into a joinder to general indemnity agreement. This is where things get a bit more complex, but also more important. In this agreement, Range Bluegrass is pledging the land and property they just acquired as collateral for about $54 million in bonds. These bonds were issued by Continental Heritage Insurance Company and are related to those mining permits. Think of it as a massive financial guarantee. If something goes wrong with the reclamation or if the company can't fulfill its obligations, the insurance company could step in, and this pledged property would be on the line. Now, let's talk about who is involved, Continental Land Company LLC. The seller of this property is 80% owned by an investment entity called Tower Ivy LLC. This entity is owned by the daughters of Josephine LoConte, who is Range Impact's largest shareholder. LoConte himself is a manager at Continental Land. The remaining 20% of Continental Land is owned by Devika Capital LLC, and guess who owns 100% of Devika Capital? Michael Kavanagh, who is the CEO and a board member of Range Impact. To add another layer, Josephine LoConte also owns about 9% of Continental Insurance, the company that issued these reclamation bonds. So, you have a lot of interconnections between the company's top leadership, its largest shareholder, and the entities involved in this massive land acquisition and the associated financial guarantees. It definitely raises questions about related party transactions and potential conflicts of interest, even if the report states these are typical terms for such a deal. Shifting gears slightly but staying with Range Bluegrass, they also entered into an option agreement on the 31st of December 2025 with a company called MIRCNG LLC, or MESIR. Through this agreement, Range Bluegrass granted MIRCR an option to purchase approximately 1,500 acres of the land that Range Bluegrass had just acquired. This option cost MI a substantial $500,000 up front, which they paid to Range Bluegrass. This option has a pretty long period running from the 31st of December 2025 all the way to the 31st of December 2031. So MISR has 6 years to decide if they want to buy this land. If NRA decides to exercise this option, They and Range Bluegrass will need to negotiate a final purchase agreement. The price will be based on an appraised value minus the initial $500,000 option fee and some other credits. Importantly, Range Bluegrass plans to keep certain timber and mineral rights as well as related facilities. They'll also retain all environmental and reclamation obligations and any associated liabilities linked to their own operations on that land. This means even if MRR buys the land, Range Bluegrass is still on the hook for its past environmental activities. MRSR can also conduct due diligence during this option period and will be given access to information about the property. Following up on the MI option, Range Impact and MIR entered into a consulting agreement on the 31st of December 2025. Under this MIR consulting agreement, Range Impact will provide services to MIR related to their potential landfill operation on the land that MIR has an option to buy. These services include things like reclamation plans, remediation, land use planning, and help with bond release applications. For these services, Range Impact is receiving a significant financial package. There was an initial payment of $500,000 on the 31st of December 2025, and then they are set to receive quarterly payments of $250,000 until the 31st of December 2027. This agreement could bring in a total of $2.75 million over its term, assuming it is not terminated early, and it doesn't stop there. On the same day, Range Impact also entered into a similar consulting agreement with FHE LLC, which is an affiliate of MISE, Consulting agreement is pretty much identical in scope and terms to the MISR consulting agreement, also providing for an initial $500,000 payment and then quarterly payments of $250,000 until the 31st of December 2027. The company states that MIRR and FHG are affiliated entities. It looks like Range Impact is positioning itself to be a key service provider for the development of this new landfill operation. Now, for what might be the most interesting part of the day's transactions. On the 31st of December 2025, Range Bluegrass, the subsidiary that acquired the Kentucky land, entered into a membership interest option and cash distribution agreement with another Connecticut-based company called Wix Building LLC, which is also affiliated with MISRG, for a payment of $500,000 from Wix to Range Bluegrass. Range Bluegrass has granted Wix two things. First, Wix gets the right to receive any cash distributions made by Range Bluegrass. This means if Range Bluegrass makes money from its operations and decides to distribute that cash, Wix gets a share of it. Second, and this is the big one, Wix has an option to convert this cash distribution right into a 50% ownership stake in Range Bluegrass itself. If Wix exercises this option, they will effectively become a 50% owner of the subsidiary that holds all this Kentucky land and is responsible for those massive reclamation obligations. This means Wix would share in both the potential profits and liabilities of Range Bluegrass. If this option is exercised, the operating agreement for Range Bluegrass will be significantly amended to reflect this new two-member structure. It is a move that significantly dilutes Range Impact's ownership in this key subsidiary dealing with significant environmental liabilities. So item 2.01 is essentially confirming the completion of these deals we've been talking about. The sale of Collins Building to Collins Reclamation is complete. It is interesting to note that Roger Collins, a former advisor to Range Impact on that specific business, is the beneficial owner of Collins Reclamation. This suggests a bit of a divestiture back to someone with prior involvement. And then, as we discussed, Range Bluegrass has indeed acquired the real and personal property in eastern Kentucky. The report clarifies that there are currently no mining or other revenue generating activities on this property. So, it is essentially raw land with significant environmental baggage attached. This section highlights a direct financial obligation. It reiterates that Range Bluegrass has entered into this joinder to general indemnity agreement. This agreement means Range Bluegrass is essentially on the hook to fully cover any losses, costs, expenses, or fees that Continental Heritage Insurance Company might incur because of those $54 million in reclamation bonds for the reckoning permits. And remember, Joseph E. Loconte, Range Impact's largest shareholder, owns about 9% of Continental Insurance. This is quite a concentration of financial risk and interconnectedness. Under other events, the company is reporting that on the 7th of January 2026, they issued a press release about these very transactions. This press release is attached as an exhibit to this report. It is pretty standard for companies to announce major business events like these. They also include a disclaimer about forward-looking statements. which is common practice to protect themselves from future litigation if business outcomes don't match expectations. Finally, item 9.01 lists all the exhibits that are part of this filing. These are the actual legal documents that back up everything we've discussed. The stock purchase agreement, the purchase and sale agreements, option agreements, consulting agreements, indemnity agreements, and the press release. Now let's look at the bigger picture here. Range Impact seems to be making some pretty significant strategic moves. They're divesting from one line of business, the abandoned mineland projects, which they acquired only a couple of years ago. This suggests a quick pivot, perhaps realizing that business wasn't as profitable or strategically aligned as they initially thought. On the flip side, they're acquiring a large tract of land in Kentucky, but interestingly, it is not generating revenue right now, and it comes with substantial reclamation liabilities. However, they've managed to structure the deal so they aren't paying cash up front and are instead taking on these obligations, which they are then securing with the acquired land and a large insurance bond. What is particularly noteworthy is the significant involvement and potential influence of the company's largest shareholder, Joseph E. Loconte, and the CEO, Michael Cavanaugh, through various related entities in these land deals and the associated financial instruments. This creates a complex web of relationships that investors should pay close attention to. The company is also entering into consulting agreements that could provide a steady stream of revenue from the development of a landfill on the optional property. This looks like a strategy to monetize their expertise in reclamation and land management. The most intriguing aspect is the option granted to Wicks Building LLC to gain a 50% ownership in Range Bluegrass. This means that a significant portion of the business that is taking on these substantial environmental liabilities could end up being owned by an outside party who is also deeply connected to the other parties in these deals. It is a way to bring in expertise or capital, perhaps, but it also shares the control and the ultimate financial outcome of this Kentucky land venture. So, what is the overall assessment? Range Impact appears to be streamlining its operations, exiting less attractive segments and focusing on core competencies like land reclamation. The Kentucky land acquisition is a bold move, laden with both potential opportunities in the landfill development space and significant environmental risks. The intricate relationships between the company's leadership, major shareholders, and the various entities involved in these transactions create a layer of complexity that warrants careful monitoring. The company's direction seems to be towards leveraging its environmental expertise, but the financial structure of these new ventures, particularly the shared ownership of Range Bluegrass, is a key factor to watch. Alright, that is our breakdown of Range Impact's latest filing. What is your take on these numbers and what they signal for the company's future? Do you see these strategic shifts as a positive move or a risky gamble? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community linked in the description below for even more insights and discussions. Thanks for watching. See you next time.